If you want to day trade Forex but you don't know what time frames you should use for chart analysis and trade execution, don't worry. In this video I prepared for you 3 best time frames for day trading and powerful combinations for day trading with multiple time frame analysis. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. For profitable day trading Forex, the first time frame that you should always start your analysis with is the daily time frame. This time frame will be applied for the identification of significant support and resistance levels and the market trend. On a daily time frame, you should find at least 2 resistances that are above current prices and 2 supports that are below current prices. That's how a proper daily time frame analysis for day trading should look like. It is pound Swiss pair, and here on a daily I have identified 2 strong resistances, 2 strong supports, and I identified that the trend is bullish. And here's how we combine the market trend and support and resistances that we identify. In a bullish trend, the supports will be applied for trend following day trading, while the resistances will be applied for counter trend day trading. In a bearish trend, selling from the resistance, we will trade with the trend, while buying from the support, we will take the trade against the trend. Here's the example of a daily time frame analysis for pound Aussie pair. You can see that the trend here is bearish, and I have identified 2 strong resistances and 2 significant horizontal supports. And why is it so important to understand the difference between the trend following day trading and counter trend day trading? Remember that the day trades that are taking against the trend will always have the lower accuracy and the profit potential. Your ability to properly recognize the market trend and to find the safe point to open a trading position from will help you to correctly assess the winning chances and the risks. Supports and resistances that we identify on a daily time frame will be applied as the zones where we will day trade. That is why after you identify the support and resistance levels, you should wait for the test of one of these levels, and only then, when the price reaches one of the supports and resistances, you start analyzing lower time frames. 1 hour and 30 minutes time frames will be 2 time frames that will be applied for confirmations and entries. And what exactly should you look for on these time frames? It strictly depends on the rules of your day trading strategy and your trading style. For my day trading strategy, I prefer price action based confirmation. Look at the pound yen pair on a daily time frame. The pair is trading in a bullish trend, and at the moment we see a test of a significant daily horizontal resistance. After a test of a daily resistance, I will look for a bearish price action pattern on an hourly and 30 minutes time frames. After a test of a key level, we start analyzing an hourly time frame, and on an hourly time frame we have a strong bearish confirmation. We see a classic bearish price action pattern, a double top pattern, and you can see that the price successfully violated its neckline. The violation of the neckline is a strong signal for us, and that can be the reason for us to open a day trade. And you can see that after our confirmation signal, the price started to fall and we saw a strong bearish movement. In the example that we discussed, there was no need to apply 30 minutes time frame analysis because the signal was spotted on an hourly time frame. I will explain to you when to use 30 minutes time frame in the next example. Look at the dollar CAD pair on a daily. We can spot that the market is trading in a strong bullish trend, and we see a test of a significant daily horizontal structure support. Once the price is testing a key daily structure support, you should look for a bullish signal. For me, it will be a bullish price action pattern that is formed on an hourly or 30 minutes time frame. After a test of a daily support, we start analyzing the hourly time frame and we start looking for a day trading signal. There, we start looking for a signal to buy, and you can see that at the moment there is no signal here. No pattern, no bullish price action pattern to buy. In such a situation, we should analyze even lower time frame, because quite often lower time frame will reveal the hidden patterns. And look, while there was no signal on an hourly time frame, on 30 minutes time frame we see a strong bullish confirmation. We see a formation of the cup and handle pattern, and the violation of its neckline is a very strong bullish signal, and that can be the reason for us to open a day trade to buy. And you can see that immediately then the pair started to grow and we saw a sharp bullish movement. In order to profitably day trade Forex, a single time frame analysis is not enough. Incorporation of 3 time frames, the daily and 2 intraday time frames, will help you to identify the trading opportunities from safe levels and with the biggest reward potential. Let me know, traders, in the comment section what time frames do you use for day trading. Don't miss my next trading signal. Subscribe to my free Telegram channel now, the link in the description below. Also, traders, please don't forget to watch my other videos.